First of all, I want to thank Santiment for inviting me out. Jan for being the data scientist I have to follow. It's always what you want to do when you're doing public speaking is follow a data scientist. A little bit about me. I'm a consulting research analyst. For the last 2 years, I have strictly done that with crypto. Prior to that, I worked at consulting for large funds and small businesses, and met balances, I know him. Maxime, probably over the summer on the Santiment server, and got to know him through his community and everything that you guys are doing here, and certainly resonated with me, considering my focus is fundamental research, white paper analytics, looking into what the crypto is and which one's a good investment vehicle. Should it be Zcash or Jesus Coin? I mean, we're not judging books by the cover. Nothing against Jesus Coin or Zcash. So anyways, I always think it's good to lead with a quote, because if someone said it great, steal it from them, and look smart if nothing else. Oh, you're my scroller. To start, one of the things that I looked at early on is, at this point now, we have somewhat like 1,600 different currencies. Tokens, utility tokens, security tokens, whatever you will. How do we weed out which ones are worth paying attention to, worth looking at, and why? Am I going to look at, we'll harp on Jesus Coin for a minute, am I going to look at that because, maybe I think Jesus was a great guy, so a coin of his should be perfect for me. Or maybe I'm going to look at something more privacy-oriented because I don't want people monitoring my financial flow. So just a little bit about why I started paying attention to the VCs, mainly because a lot of the debates I would have early on is people would issue points like, venture capital doesn't always work out, doesn't always issue returns on all the funds dumped into it, so why are you going to say that it's a smart thing to follow them? Well, it's not who I know, it's who they know. Venture capital offers such a great range of networking for those involved that the more you look at it and watch where the money's flowing, the tighter the circle that the money flows in. And you can see how each project and each venture capital firm starts to benefit from the other's investments, interests, networking, who they might want to be funding and who's funding them. So, I feel like I'm pressing a button.
You can slide on the screen then.
Stop here. Almost.
Huh?
No, the
Next
screen.
slide.
Yeah. So I just wanted to give you a little bit of background into how much money is actually in venture capital right now, looking specifically towards blockchain technology. Software, which I've outlined below, we'll get to, is what they categorize as blockchain. And as we can see, from 2006 to 2018, software just grown exponentially. This is where money is being funneled into, like not just tens of millions, like hundreds of millions. In fact, this year we're on pace to break 100 billion, I'm sorry. This chart's in billions. 100 billion venture capital in the US. And roughly 40% of that is software. Math's pretty easy there. So it's worth looking at, it's worth paying attention to, because this is not a little bit of money. This is money that is well researched, that is well funded, that is backed by some of these smarter, more pointed firms that have specific focuses. So if we go down a little bit.
Can I assume that the dip in 2017 was because of the ICOs?
That's a good point. That was one of my thoughts too.
Yeah.
That 2017 saw the adjustment because they lost money. Money started going away from the middleman and just went directly to the companies. And we rebounded from that once they smashed the ICOs and told everybody they were scams. So Yeah, oh, and this, again, another good point. This is only up to Q3 on 2018.
Absolutely. Yeah.
So,
It's going up.
so we have yet to see, and typically, you know, there's another chart that I don't offer. The last quarter of each year for the last 5 years has been explosive as far as venture capital funding is concerned throughout the U.S., specifically in the software sector as well. Just scroll.
I have in addition, does anyone have the actual figures for the same amounts raised in Germany? I think it's in the range of 5%. Well, do you know how much the venture capital investments are? I actually heard that today at Deutsche versus Equity Forum. I think it's 3-4 billion compared to 90 something in the US.
Yeah.
Which is in this comparison, like 20-fold in the US.
It's certainly becoming like, well, has been a long time, a large trend. I mean, mostly coming out of California. You know, literally,
Mostly, yeah.
literally, I think it's 60-70% of the venture capital money is coming out of Silicon Valley. The funds are there too, and next comes New York and the Northeast.
But Germany is going to see an explosion, is my personal prediction. Because when you compare the wealth of the nation compared to the investment, it's minuscule. I think Germany's wealth is 17 trillion or something, and only 4 billion is going, or something like that, to VCs. And it's over banked, Germany. And they're catching up. This is why it's the right place to be at the moment, because
Absolutely.
it will explode.
Yeah, I mean, venture capital has consistently been growing since 2006 in the States, and a large amount of that can be looked at as wealthy families, wealthy conglomerates wanting better things to do with their money rather than play with equities markets, which are not returning as much as dropping $100 million on something that is giving you 50% gains. And on top of that too, a lot of these funds are walking away with ownership stakes. Far more than just the initial investment is up for grabs here. We'll get to some of those people and some of that in a second. Excuse me, I'm like a little fresh on this. I was finishing up this last night with my 2-week-old daughter, or 2-week-old daughter, till 4 in the morning because she decided that she wanted to be a night girl and hang out with daddy. So we scroll up a little bit here.
I think probably also part of the picture is that if you look at the VC market in the US, there's quite a lot of Series B, C, D series, so later stage, which is a lot bigger compared to European, rather early stage VC money.
Well, a lot more early stages is what I pay attention to here, because seed and angel rounds are where most of the money going into software is. So rather than late stage and exits, the concentration is early stage. It's seed rounds. It's starting from angel investors, and I think it's almost half actually, from what I recall, is mostly early stage VC money. All right. So now what I really want to do is, now that we've got through just a little bit of background, I'm going to walk you through a little bit of the process of what I do when I'm looking at money, when I'm actually following the money and I want to find out what I should pay attention to, if I'm paying attention to Zcash or Jesus Coin. And part of that just starts with looking at one place and letting that rabbit hole find me to another. So we can call this a little bit of backtesting, just because this is some old data that I had actually used and traded myself upon realizing it. So looking at Coinbase, the names are relatively familiar, but I'll repeat them a bunch just so we can kind of start to see the flow where the circle gets tighter. And Brian Armstrong, and I'll butcher some of these names, Fred Ehrstrom, obviously the CEOs, and both sit on the board. And Coinbase, having been invested by Greylock Partners, I should note that would be Reid Hoffman, Greylock Partners, co-founder of LinkedIn, one of the initial founding board members of PayPal, angel investor at Facebook, that Reid Hoffman. He makes good decisions every now and then. Union Square Ventures, Fred Wilson, another individual. I believe he actually helped fund the High Line in Manhattan too, so somewhat good ideas here and there.
7 rounds in 5 years, yeah?
Yeah. So they've raised a chunk of money, one of their most recent ones being a few weeks ago for $300 million. And I think their public statement was just for a rainy day.
Yeah.
I'm going to start doing stuff like
Raise
that.
when you don't need it.
It's smart, you know, it actually is, given the sentiment of US markets right now. You know, raising $300 million when you have that power to do so is smart. And again, Andreesen Horowitz, Digital Currency Group, Brock Pierce, ever entertaining as he is quite rich, and Blockchain Capital. These are just some of the more notable ones that have invested in Coinbase. And I go on to point out the past employees because this is where you start to see things tie together a little more. Charlie Lee, of course, the founder and creator of Litecoin. Olaf Carlson Wee. Linda, I will not be able to pronounce that, I think it's she. And Antonio Budo. These are just names to remember, and I'll repeat them again. As their board members, we already CC the 2 CEOs. We see Fred Wilson of Union Square Ventures, Chris Dixon, Katie Hahn, and they're both of Andreesen Horowitz, and one of the core Bitcoin developers, Gavin Anderson. It's important to note too, he became a funded Bitcoin developer in 2015 thanks to Fred Wilson, Reid Hoffman, Jim Breyer, and a few other individuals who all have direct ties, literally direct ties. And he's an advisor for Zcash. So if we open up the books and just say, look at Andreesen Horowitz, Chris Dixon, their general partner, led Coinbase's, I think it was their Series A and Series B. And from that, he sits on the board, which is great. As venture capital who's leading the funding round, he should. And he also led the funding round for Polychain Capital, which is another crypto-focused hedge fund, only cryptocurrency. Chris Dixon is in charge of Andreesen Horowitz's A16Z crypto fund, which is a $300 million fund. So that's $500 million funds, right? 2 of them worth $500 million, totally focused on crypto. Both of them with ties to each other, ties to Coinbase, and relatively close relationships amongst the rest of them. Some of the other, this is the other participants in Polychain Capital, along with Pantera and Fred Wilson with Union Square Ventures. And if we start to go up a little bit, we can see that Andreesen Horowitz participated in helping fund Ripple, Basis, MakerDAO, dYdX, so on and so forth, and obviously what we're talking about, Coinbase, Polychain Capital. Some of this, again, gets a little redundant, a little bit repetitive, yet I should mention 0x, which we're getting to right now. I started investing in 2017 because of this data. Well before it got listed on Coinbase, well before people said it would be listed on Coinbase, and well before anybody was ever talking about it. From this, and from this research, I'm able to identify what's worth reading. Now, which white paper of the 1,600 that we have available to us, half of those being forked from Bitcoin, which one's worth studying? So that's what I've done with 0x. And Polychain Capital, as we were talking about earlier, it's actually run by Coinbase's first employee. It's weird how it works. He was the head of risk and their first employee, split off and started the $200 million fund, which was funded and led by Chris Dixon, probably a buddy of his. I don't know. I'm assuming things. But nonetheless, the circle's pretty tight there. And to make things a little bit more interesting, he was also an advisor for 0x Protocol. As was one of the co-founders of Coinbase, as was one of the other co-workers who I believe was the head of engineering and the founder of Augur, Joey Crone, or Cone. Like I said, I'm going to butcher the names. Some of their notable investments, we're seeing a repeat: 0x, Basis, MakerDAO, dYdX, Coinbase, and some of the notable investors: Andreesen Horowitz, Pantera, Square Ventures, Starkware Capital, his boss, and Joey Krug, and Alexander Pack, who is actually one of the lead founders of a newly formed fund called Dragonfly Capital, which launched 3 weeks ago with a small amount, just like $100 million. So, go on up here. And this is Pantera, who's raised $156 million, whose chief investment officer is also the founder of Augur, who is also a 0x advisor and personally invested in Polychain Capital. You know, and again, I know I'm harping on it. I wanted to be as repetitive as possible, just to point out how clear it starts to become. And this is not saying that this is a fail-safe investment strategy. This is an identification strategy. This is a good way to say, how do I whittle down a list of 1,600 different projects, individuals, technologies? Which one stands out? Well, there's research teams giving us the answers that are telling us, like, this is what we're looking at. And if someone's putting $500 million into something, sorry, Jesus Coin, I don't think it's you. I just haven't seen the name. But as I read and as I continue to look, I start to notice these trends, and I see Pantera Capital pops up again. Investors for them: 0x, Polychain Capital, Basis, which is a stable coin, Ripple, Civic Token, Zcash, Brave, and Starkware Industries. And I always found it odd, like as I started to look at the employees, that the co-founder of Stellar, former founder of Ripple, is also one of their listed employees. Jed McHale, who I actually really rather admire and like. Yet there are close ties here too, and we're again tied to Coinbase pretty directly. Mm-hmm. So why is it weird to assume that we should have known ahead of time that Stellar, 0x, Brave, these things that shocked everybody when they were announced as possibly the first things to be listed, other than the large caps on Coinbase, are soon to be added. So I put dYdX up here because yet another Coinbase employee started a crypto company, built a protocol for person-to-person margin trading, which is actually pretty interesting, and it implements 0x protocol. I don't know why he would do that. Maybe because he knows everybody from there, and everybody that he's worked with ever has invested all their money in it, and he's rubbed shoulders with all the investors, and maybe he's just a great coder and has came up with a great idea. I actually find the idea to be pretty interesting. And there's a small part about Dragonfly Capital partners here. I added that just to show yet even further how each one continues further down to the other. It's freshly launched by the owner and founder of Andreesen Horowitz, Mark Anderson, and Chris Dixon, and it looks like Polychain Capital's founder, Bitmain's involved, David Sachs, who sits on the OX board and has his own fund as well, and Bain Capital Ventures. Each one of these continues to go to another direction, Yet, no matter how many times I follow it and I look at Bain Capital Ventures, I'm still seeing the same projects popping up. I'm still seeing the same individuals, the same money flowing in a certain direction. Starkware Industries being last week. And again, we have Fred Eshram of Coinbase Capital. We have Linda Shi of Starkware Capital. former Coinbase employee, Polychain Capital. Coinbase Ventures, actually, their venture fund dumped money into that. Pantera Capital, and our good friend Vitalik, and Naval Ravikant, who he's the AngelList founder and has invested in Zcash, Basis, Maker, a number of things that are worth noting. So Starkware Industries is founded by 4 individuals, though, 3 of which are tied almost directly, 2 of them directly to Zcash, 4 of them all tied to MIT. MIT can bring us to Reid Hoffman via Digital Garage, via the director of MIT Media Labs, and then the Digital Currency Initiative. Now, I know I'm spitting a lot out here, and that's kind of the point. Like, I just want to continue to harp on the fact that each name brings it right back around. And each time I look at a major investment from one to another, it turns me right back to another direction. So, yeah, Zcash is maybe a good investment. I don't know. Yeah, I listed all stuff down here. Clearly, we've seen Zcash, Basis, Stellar, Maker, and dYdX pop up more than anything. Now, truthfully, this isn't the most riveting stuff in the world. It's not like, exciting as price action on Bitcoin over the last 3 days, but I trade and I research. Okay? I consult and I read white papers. If I want to waste my time, I can start reading white papers on Spank Chain and other moronic shit that is actually out there that people buy for some reason. And I don't know why. I really don't.
It's fun.
Yeah, maybe so.
High risk, high reward.
Yeah. It displays a lot about the market. It displays a lot about the retail players in the market. I don't care what retail in crypto does. I really don't. It hasn't matured enough for me to find it to be worth paying attention to, because price action follows the news instead of is led by it, and that's fear reacting. And when most trading in Bitcoin and cryptocurrency is happening over the counter, yet if you look at crypto Twitter, everybody panics and thinks that they're dumping the market because somebody tweeted a bad thing. Yeah, it lets me know that it's worth ignoring. So, lastly, I just threw this up there just to see the activity on this year alone. Again, this is only 3 quarters on 2018 in the US, but closed somewhat like 6,500 deals, and tipping that $100 billion mark. It's not going away, and I wish this chart had shown 2006 prior too, because rather than draw our minds to 2007, 2008 when the market crashed, looking at the expanded view on this, it's not correlated with the housing market crash. It's a consistent parabolic rise.
I have a question.
15 years.
Why is the amount of deals actually decreasing and the deal value or volume increasing?
The value of the deals is hiding. That's what it's showing you. People are stopped coming with $10 million, $5 million. These are $50 million deals. These are $30 million deals. These are large deals.
And do you see this as a positive development? Or?
Yeah. I mean, I see the movement of funds within well-networked organizations larger being a great thing, because the risk is higher. That means their risk management is going to be far more precise, as opposed to saying like, all right, we'll take the hit on that $1 million investment there because it wasn't well researched. But if we're dropping 75 million on a project, we're going to pull out the stops. We're going to make sure that everyone we know, everyone we think might have connections to helping us here, if it's a protocol, who can launch the protocol?
I have an additional point, because I remember I was in Berlin last week, and we were discussing as well that most of the funds are quite over-capitalized, especially in the US, and that the competition is like quite savage. And one of the points that they made out is that a lot of VCs are actually just jumping on every single deal they can get their hands on. Do you see this as a potential risk as well for?
Yeah, I mean, anytime we start talking about people throwing money at anything just because.
But did you see this as well as one of the factors there, or?
To be honest with you, I don't know.
Okay.
I don't know. I mean, it's a possibility. I just don't have enough insight to be able to say yes or no. I think, again, when it comes down to people throwing money left and right at things, thinking like, hey, guaranteed to get, 50%, 100% back. Yeah, it's not a good thing. When you have 3 houses in Florida, you're going to have to assume if you can't pay the mortgage on one, probably not going to go well for the rest of us. But yeah, it could be.
Do you see the investment driving the quality of investments, or do you see the research, actually there being fundamental research into the project that is backing the decision?
To be honest with you, I think the quality of what they're picking, because again, this is what I dive deep into. This is then which takes me to reading the white paper and finding out why I need to care about what a relayer does and how that issues governance among 0x protocol, and absorbing that information shows that they're making some intelligent decisions here. They're making some decisions that are not just based on, hey, I have a former colleague who is holding bags on this company, we could help him out, he could help me out. It's actually informed decision making where they're looking at things that have application and use value. Like person-to-person derivative swaps. I mean, I remember you and I were talking about that last month. I mean, that's brilliant. I think it's kind of shocking it took this long to get to that idea.
Well, there are a few other approaches, but they're not something.
Because you can in the traditional fund space, you also see concentration of investment, and that's not always driven by good decision making. It's much more about who do I know? So this guy invested, so I'm going to invest as well. And there's a company here in Coinbase that did a study of this, and so a lot of the deals didn't even have a proper due diligence because they just asked who else is investing. So if there's a lot of capital trying to go to somewhere, it could be that some projects are going to be overfunded.
Certainly. Again, we're seeing massive amounts of money, and it's growing quarter by quarter, year by year, funneling into what has always been considered an extremely high risk type of investment vehicle. There's a reason for that. One, of course, is going to be the same thing that drove Bitcoin to go straight through the roof. At the end of the day, these are powerful firms too. Andreesen Horowitz is not a small firm. I think with it 2.7 billion that they manage in assets. They've been doing this for a while. Sequoia Capital, they've been doing this for a while. Fred Wilson, I think, Jim Breyer, I'm sorry, has a net worth of over $3 billion. They don't get there by mistake, I don't believe, but I agree with you. I think it's something to pay attention to.
Maybe, what would you say are the main differences in those VCs in Europe and in the US?
My exposure to European VCs is the last 6 months. I literally.
Your first feelings then?
You guys are great, all of them. I can't answer that honestly, so I won't try to. I just can tell you from the research I've done with US VCs and having consulted for funds in the States, and the last fund I consulted for was one of the world's largest, and they certainly did not care about networking. They certainly did not care about, a buddy did this, buddy did that. It was, where are the numbers, where are the facts, is this going somewhere? Are we putting money into some garbage, or are we are we attempting to make garbage something better? And if the answer is that, then the answer is no. Probably one of the best things I learned from them is they focus on data streams more than anything. And it's probably what helped them grow to be what they were. So
just to add, biggest difference between American VCs and European VCs are the valuation. That's the number one biggest thing. And we've seen it, a company of ours getting valuation of 10 million in Europe and 18 million in the US. And in the US they invest pre-revenue, while in Europe they 5 years.
pretty interested to see if that changes too.
Yeah, that's for sure.
Following the trend of US VCs who,
I see it's changing with the ones I work on with personally.
yeah,
On a bigger scale, I don't know. I haven't seen it yet. They're very conservative here. In the UK, it's different though. In the
Yeah.
UK, definitely, you could say more, perhaps.
I mean, my only real interaction with any type of advisor here has been my personal advisor in Germany, who is extremely excitable, I would say. A great guy, but very often asking me if I'm rubbing shoulders or coming into contact with anybody with his clients who are eager to fund new exciting projects could possibly get involved with. I remember that being something that I thought was interesting when I first met him, and it was a connection through the New York office that I used to deal with that brought me to him, and I remember calling my old advisor and talking to him about it, and he's like, yeah, no, he's rather ambitious, and his client base is looking to grow their wealth and get involved in things, and that was something I didn't expect. Yeah.
Well done, Max.
No, great scrolling job.
Yeah.
So,
I know what is option.
yeah, on that last slide, I just left a few foods, and if you actually want to scroll up and just leave it there, like, it's just a bit of food for thought of, like, you want to look into things, that's a further direction to wander. I gave you Coinbase, I gave you Starkware and dYdX, and that's a really small portion of how obvious things are right now. And just a simple look into some of this can lead you in the direction of some pretty profitable stuff already. And again, like, you know, to be clear, I'm a research analyst, but I trade my own book. I'm doing this pretty well on my own for 2 years. Not to pat myself on the back, it's just the data's there. And it's one of the things that really excited me about Santiment is being able to take this data and correlate it with market activity and see what actually is happening amongst social trends, amongst, you know, traders, forums, so on and so forth.
Life's quite practical. How can I part at this, ladies and gentlemen? Can I register in the net and say, hi, I'm there? Or
I'm sorry, I don't know.
how can I take part in the business of this gentleman?
Oh, okay. So this is we're talking about all the investment into cryptocurrency projects.
Yeah.
So the only thing, if you in a proper time identify what they're doing,
Yeah.
so you only take risk and you buy the tokens thereby.
Yeah.
So you definitely will have no access if they invest in equity level, they're out of it. But if it's about protocol level or platform level tokens, like we've discussed, dYdX, MakerDAO, he mentioned, they actually don't need equity. There is no equity in this thing because it's purely tokens which hold the value of the metal.
How called?
He mentioned two, MakerDAO and dYdX,
Yeah.
also Brave, BAT. Actually, I will show the data because it's interesting. We didn't prepare at the same time our presentations, and my presentation was supposed to be different, but now I will jump on what he said and I will show some data which does prove his point. And then, I don't know, dYdX, is it already established something? dYdX?
No, it's not. It's,
Because it's not known.
no, I mean, again, dYdX was funded like probably a few weeks ago for the second time.
Equity, and they're doing the shorting and loaning of Ethereum that we saw with
It's using Radar Relay 2 and Wrapped Ether.
Okay.
So it's one of the things too that I forget who posted on the forum. Someone posted something on the blockchain to watch the Wrapped Ether, and you can see where it's going to, like IDX, Radar Relay, and so on and so forth. And I've been watching the last few days, and it's interesting to see.
especially Ethereum.
Sorry.
It's especially invested in Ethereum.
Ethereum-based tokens, yeah.
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 You mentioned about radar relay. Was that?
Yeah.
What was that actually? Can you explain it a bit?
It's a decentralized exchange.
Okay.
So,
But based on the 0x protocol.
yeah.
Decentralized.
Yeah, so it's not run by any specific company or individual. It's peer-to-peer trading. But in this case, Radar Relay allows you to put your Ether in a contract address, which somewhat freezes it, so to speak, and you can short Ether person to person.
This gets very complicated. It took me a while to understand
This
it.
is interesting.
Yeah.
If you read about dYdX and follow exactly how it works in the background with a lot of smart contracts that happen
Yeah.
simultaneously, it's quite amazing what it did.
But it's not going to be so abnormal to hear about in a year.
Yeah,
You know, we're just seeing its emergence now as people can see, like, oh, well, that's a brilliant idea. I certainly like BitMEX, but I don't really like having to pay the fees to get it out of there and having to deal with the fact that sometimes they go down when the market's about to go down. I'd much rather say, hey, Jan, want to have some of my Ether so I can short it? And be like, I don't care. And then I short the market person to person, so it's an exciting notion.
Yeah, okay. Yeah, I think we can then do question answers or communication, so that we maybe now I will try to jump on top of it with another 20 minutes, not a long time. But yeah, you see, yeah, we always try to bring high quality, but it can get very easily, very fast complicated. So I will try to bring it now on the more easy level. I will try. Thank you.
Thank you.